Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hanks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right. So Wayfair spiking higher this month. Today, got a couple double upgrades. Another one out of Wedbush from neutral to buy. They announced 10% reduction in workforce last Friday. I think that's given it a little bit of pop. Is your data reflective of these analysts getting a little bit more optimistic on this stock?
Not really. I mean, you look at the data. I mean, this is an incredible move by the company, right? I mean, by the stock. I mean, if you're investing in this, this is a very happy few days for you. And this is a stock that we've had a great history with. You go back and look at purchase intent back in 2020 when COVID started hitting like that March 21st, March 27th, somewhere in there. We put out a report that was very bullish on this company as their stock was just completely falling, caught the bottom, and I think we 8x'd from there, maybe 10x, something like that. And it was all because of that purchase intent spike. You can see that that was that green line going through the roof. That's where people are basically, they had a huge number of people moving, huge number of people staying in their homes and saying, you know what, I'm sick of looking at this same wall. Let's change things. And Wayfair was the beneficiary of that. A lot of home renovation, a lot of people were buying homes and they went to Wayfair. And so the data led us to that fantastic trade. But since then, you can see the purchase intent has really fallen off, and the stocks followed over a multi-year view. Now, if you zoom in the last few days, it's beautiful. But I think what's happening right now is they've actually got they've got some trends sort of working against them. If you think about Wayfair, they're not high end; they're more of a value brand. And so we're not seeing the value brand pick up. We're seeing home renovations down, people talking about buying a home down, people talking about using higher end decor and furnishing. That's actually up. So they've got a lot of headwinds going against them. And when you look at just the overall picture, I love the fact that they're cutting employees. They're going to save a ton of money on that, and I think that's where a lot of these upgrades come from. And they've got a little bit of an uptick when it comes to purchase intent. Over the last quarter, that's up about 17%. Their website visits, which is extremely correlated to revenue, is up a little bit as well. They're still down year over year, but they're starting to move sort of in the right direction. It looks like the bottom may be put in as far as the data is concerned. So I'm not sure if some of our data got out or if everyone's seeing similar things to what we've got as far as calling the bottom, but it's not like there's a huge spike in run-up on this company. It's more like they're getting costs under control, which investors like, and maybe the bleeding has stopped when it comes to demand, but it's not super rosy, super positive. I mean, the data overall is still kind of bearish, if anything, but short term, it is starting to kind of peak in the right direction.
Landon, JP Morgan, Bank of America, Wedbush, one of the quotes was, the tides have turned positive for this sector. And remember, this stock was $369. It got down to, it's just at 57 now, and it's rallied up to there. So this is a stock that's lost significant part of its value. So the double upgrades that Tom was mentioning here, they cut 1,750 jobs this past Friday, 870 back in August. This is a company that, selling. They had an incredible run during the pandemic. $14 billion in sales, now down to $12 billion. But the people seem to think now, if this is turning, getting positive again, and the chart shows that it's starting to tick higher. This is starting to be a positive story for Wayfair. What is the misfire between LikeFolio's data and what all these analysts are saying? Or are you starting to see the same thing? They're just jumping way ahead.
Yeah, so I think that when you look at like purchase intent, web views, all of it has sort of hit a bit of a bottom and it's starting to turn up. I mean, I'm talking like in the last couple of weeks. I mean, this has not been going on for very long. So you can see here the number of people visiting Wayfair.com. You can see it at the end of that chart. It is barely a little turn towards the upside, but I wouldn't call that a trend break as far as which way that's going. That has been on a downtrend ever since the pandemic, basically. Less and less people was visiting their website. And as I said, that is extremely correlated to their revenue. I think it's like 0.98 or something like that is really high. The other thing that's concerning for us is their happiness. If you look at their consumer happiness, 4 or 5 years ago, they were up in the 75 to 80% range. Very, very happy customers, right? And you can see that trend line, that sort of purple line, just continuing to head lower and lower and lower. I think they're in the mid 50s right now. Just to give you a reference, IKEA is 72. So Wayfair is a 57 or so on the happiness scale. They're dropping off quarter over quarter. They're dropping off year over year. And I think that's a concern because that's what gets people coming back, is happy customers. It gets people to refer their friends to their service. So if you're not making your customers happy, if you're only hitting 57%, that's really low. And so one of the things that pushed us to be so bullish on this company back in the pandemic was all the trends working in their favor, all the purchase intent, all the demand, everything was working in their favor, and they had a really, really high level of happiness. Very rare to see high happiness with high purchase intent. That's why we were very bold on going in on that company when everyone was selling everything. But now it's kind of like everything's drifting off. Purchase intent, web visits, and happiness has been drifting off. Lately, we're seeing purchase intent and web visits start to just barely creep up. But frankly, I think this is a little bit too early. If I was an investor in this company, I'd say, you know what, I appreciate the gift and I'd take my profits today.
Yeah, so based on that data, we don't have earnings until like the 23rd of February. Landon, we're seeing the optimism here out of the analyst community. They're always behind the 8 ball, typically or historically have been. And you can see that from your data as far as consumer purchase intent mentions. So when you look at this, you're saying stay away. I'm guessing it's got a negative score on it.
It's actually like a +7, and it just got there over the last week or so. So I have a feeling that they've got data similar to ours that is, maybe calling the bottom as far as demand goes. But I mean, we're talking about going from a clear downtrend to maybe this is the bottom. It's not like everything is shooting up and all of a sudden everybody's buying from them. So I think it's like the bleeding has stopped and they look like they may get costs under control. But in my opinion, this is a bit of an overreaction from the market, a little bit of an overreaction from the analysts, the double upgrades. I wouldn't go that far. So, I mean, you can make a case that it's oversold based on the number, the demand based on the stock price now versus like 4 or 5 years ago. But the stock price 4 or 5 years ago had a lot of potential growth in it, and they've already made that run, and they've shown what they could do and what they were unable to hold. So they didn't hold those 2020 and 2021 levels. So now I think that there's a little bit of a question mark on whether or not they can achieve that growth again. They need another pandemic, knock on wood, in order to get people to coming back to their website. So the happiness for me is what scares it away. I just don't like a company that produces that low of a level of happiness, even if there is a little bit of an uptick in demand recently, that we don't have signs that this is sustained yet.
Yeah, I think one of the key things is if people start moving, interest rates are double what they were a year ago, and if we see some movement on the housing front, maybe get those interest rates down, that would probably provide a lift also. All right, thanks, Landon. Appreciate it.
All right, guys. Happy Monday. Thank you.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the consumer sentiment data on Wayfair.